Thanks so much for tuning into this earnings conversation with Biocon. The MD and CEO Siddharth Mittal joins in on to talk about what was arguably a tough quarter for Biocon. The question is, can the rest of the quarters recoup some of this performance miss? And miss, I call it, because compared to the Bloomberg estimates, save for the revenue and almost all the other counts, there was a bit of an underperformance. Siddharth, good having you. Thanks for joining in. I hope all is well. What happened in the quarter compared to estimates? I'm talking about really.
So thanks, Neeraj, for that question. It's my pleasure to be here with you. Well, it's a way how you look at the quarter. We feel it's been a decent quarter. We've had a very robust growth of 23% compared to last year. And when you look at all the business segments have done well. And in fact, if you take out the one-off sale that we had in the quarter one of last year from COVID portfolio, whether it was itolizumab or whether it was remdesivir, the growth has been quite robust. Of course, there was a higher expectation of growth when you look at sequentially. We've seen a little bit of a degrowth. There were multiple reasons for it. We are, however, hopeful that for rest of the year we will have a good growth in all our businesses on account of various things. I think we are also expecting product approvals, whether it's in biosimilars business or whether it's in generics business. We are expecting newer capacities to be qualified and commissioned, which will lead to increased supplies to our customers. And we are also expecting increase in market share of our already launched products like biosimilar glargine. We have seen a very decent ramp up of glargine from beginning of the calendar year till June end. And basis the contracts that our partner Viatris has locked in, we expect that will continue to drive growth for rest of the year. So on an overall basis, we do expect a good second half performance over the first half.
Got it. Yeah, I mean, biosimilars 29% and generics 19% is not a bad number. It's just compared to the estimates on most line items, there was a bit of a disappointment for the street, especially in the margins front. And I'll come to business in a moment, but just a word on the margins. EBITDA margin about 520 basis points lower than estimates compared to what the Bloomberg poll was suggesting. Was it a factor of input cost, and does it stay into quarter two or quarter three, if at all, or were there some other pressures which led to this, and how would these shape up in quarter two itself or in the quarters ahead?
Sure, Neeraj. I think let me explain the margin movement. As you would have seen our numbers, our R&D expenses have gone up significantly. It's gone up to almost 198 crore levels compared to 130 crore in the last year. And that's 13% of the revenues. Now, that's, of course, impacted the margins. What we have said is we will be around 12 to 15% of our revenues in terms of R&D investments. These are very important investments for our future growth. However, these expenses tend to be lumpy. Now, 2 of our biosimilar molecules have entered clinic earlier this calendar year. And as these progress, it's of course going to augur growth in the coming years. But the spends, which tend to be lumpy, had an impact in quarter one. Now, that's one part of it. Second is we also had a impact because of rising input costs or increments given to our employees and various other costs like freight costs. So that has had an impact. And I think the impact of what I just mentioned would continue for rest of the year. I don't see anything normalizing during rest of the year. We've also seen a currency impact of dollar versus euro, which has impacted the margin. Viatris has a very large part of the business coming from Europe, and as you know that Europe, euro and dollar is almost reached equal level, and that's impacted the margins during the quarter. Now, of course, we do not expect that equilibrium to change unless the war stops or some different dynamics happen in the future. So that again would continue to have an impact for remaining fiscal year.
So is raw material and input availability an issue, or is pricing an issue? Because when we were talking to Laurus Labs about a couple of hours ago, they also mentioned that for them, for example, solvent prices were sky high, and that's a big risk. But availability is not a risk; it's the pricing which is becoming a risk. So, what is the issue for you as well?
So availability is not a risk. Okay, so let me put
Okay.
it this way: that if there is everything available at a price. So if you're willing to pay a higher price, you get the solvents or reagents or raw materials. I mean, when you look at KSMs, we have not seen much of an impact. But if our KSM vendors have been impacted because they are using solvents and their cost has gone up, then they'll come and ask for increase. Now, most of our synthetic products today has a heavy dependency on solvents, and we have seen solvents or even natural gas for that example. Today, we run our utilities, whether it's boilers, chillers, on using PNG gas, and the gas prices have gone up. The availability, I have not seen any disruption
Got
this
it.
year because of some resource, whether it's KSM or solvents not being available. And I think that's very important part of our supply chain planning and our commitment to our customers, that we will do whatever possible to ensure that they are not impacted, thereby patients going out of drugs.
So, as somebody who's shepherding the ship, Siddharth, between the give or take on uh, taking in high-priced raw materials to finish an order versus letting some of the orders go because it might not be as profitable to perform those, where is it that you will bend towards?
I think the later, to be quite honest, because one, while we, of course, I hear in the business of making profits and giving returns to our shareholders, but we also have an equal responsibility to continue to serve patients worldwide. And if it means we have to temporarily do business at a low margin or negative margin, then we would do it, because
Got
I
it.
think we cannot have our patients out of medicines. So we have had, I mean, I'll talk about statins as an example. For generics business, statins is a very large business segment. And today, and statins are heavily dependent on solvents. We've seen few of our statins actually go negative on margins, and we continue to service those customers. But we are also working on steps to reduce the cost and work on CIPs, because long term, we need to continue to be sustainable. We cannot take a loss or do a business at a break even for a foreseeable future. So our teams are working to make sure that we come out of these issues and we work on improving our cost base for these products. But of course, there is a gestation time and lead time. There's a regulatory approval process before we can implement some of these changes.
So that I'm guessing, sorry, I'm talking a lot about this because this seems to be a clear and present danger of sorts. Is there a trigger point which could solve this? Maybe the geopolitical conflict or a China resolution, or is it difficult to point that? Will it be gradual whenever it resolves?
I think it's linked to a lot of the solvents are linked to the oil prices. So it's if Russia-Ukraine war and other geopolitical tensions that we have seen has definitely had an impact on these solvent prices. So in fact, if you look at our first calendar quarter, we didn't see that big an impact. We did see some impact in last fiscal, but not to the levels that we are seeing in this quarter.
Got it. Okay, let's talk about glargine, key driver for biosimilars in FY23. I presume I think I'd read that you guys expect glargine to expand to mid to high teens by end calendar year 22. Is it on track?
That's correct. So we've already reached roughly 9% in June, and I think the latest data indicates we are at 10%. And basis the contracts that Mylan or Viatris is working on, we expect mid to low teens kind of market share by end of this calendar year. And of course, as we get into the end of fiscal, we expect definitely to be at the mid-teens level.
Okay, and I reckon that the Serum Distribution Alliance starts from the second half. Is that also one reason why you said that the second half would be much better than the first half? That also contributes a bit.
Of course. So that's inorganic. When I mentioned second half would be better than first half, I meant more organic. So even without a Viatris acquisition or Serum acquisition, in all our businesses, we expect second half to be better for the reasons I explained. But of course, so when you add Serum contribution and Viatris acquisition, then it would be exponential performance in H2.
Okay, and the new manufacturing facility for immunosuppressants, I presume even that was expected to get commercialized in FY23, again second half or earlier?
So it got qualified last quarter. It is undergoing qualification process, which takes almost 8-9 months, because you have to do a tech transfer, manufacture batches, put it on stability. update your DMF, and then await FDA inspection before commercialization begins. So what we have guided for is the commercialization would begin especially in the developed markets in FY24, and the qualification activities would get completed in FY23.
Oh, sorry, maybe I got my bearings wrong. I actually thought it was FY23, but nevertheless, so but there you expect significant growth for Biocon coming in, right? Even if not immediately in FY24, then the second half of sorts.
That's right. But this is only a greenfield facility which has a much longer regulatory path compared to a brownfield expansion. We have in our existing facilities in Bangalore, we have done brownfield expansions. We had taken some shutdown in Q1, and which is continuing in Q2. But that additional capacity which we will get from these brownfield expansion would lead to growth in the second half for sure.
Okay. I guess I'm running out of time, but I because you would have to leave. But just one more question on the Telangana plant as well. Now, yes, it is. You've declared that you are going to respond, but can you give us some idea about whether the observations are serious in nature, or are these something that are routine and you will be able to deal with them swiftly?
No, we are quite confident of our quality systems. We are getting prepared to respond to the FDA, and we don't see any issues in addressing all the observations which the FDA had, and we will come up with CAPA plan to address these observations.
Very cool. Okay, Siddharth, thank you so much for speaking to us today. And these are particularly tough times, especially since you have to do the business because patients are at the risk of not getting supply. So it's a tough job for you, but we wish you all the very best for the rest of the year.
Thank you, Neeraj.
The pleasure was ours talking to you. Thank you so much. And viewers, thanks for tuning in.